Good morning, everybody. Welcome to the Flow Show. Here we are, Thursday, the 6th of November. And a few things going on once again today. Lots of news floating around. Lots of stuff to get our teeth stuck into, which we will do shortly. Morning, Kate.
Morning, Ryan. Morning, everybody. Hope everybody is doing all right today.
Yep, hope so as well. If you're not, let us know in the comments and we'll see if we can cure your ailments as well. Right, let's go.
Or get you an appointment with the doctor.
Yeah, one doctor, depending on what type of doctor you're looking for, of course. But yeah, there's all sorts. Anyway, right, let's get going. Japan, the good old BOJ, are going to be waiting a bit longer, perhaps, on the wages front. We got earnings data out. This silly calendar doesn't show all the news. It shows overall wage income up 1.9% as expected. Overtime pay year on year up a bit. But the news is in the real cash earnings, which came in at minus 1.4%, which was not as bad as the estimated down 1.5%, but it's still a negative number. And that's something that the BOJ want to turn around, of course. Cash earnings year on year, they were better, 2.4%, beating the 2.3 expectations and prior 1.9. Full-time pay, that was a little bit softer, 2.2% versus 2.4% prior. But it's that real cash earnings number that is the one that won't be welcome at the BOJ. Though they might be getting a bit of good news because the Labour Union, and got my squawk shut up. 1 second. There we go. Shut him down. Sorry about that. Yeah, so the Labour Union, UA Zenzen, apparently is going to be looking for a 6% wage hike for their regular workers. So that's up around where we were before. Other unions were looking, have said to be looking for 5% or more. So we're up there again. Kate, how long is it going to take before these wage hikes actually push the real earnings higher?
Good question. So if you're talking just about negotiations, they are going to be lasting deep into February. But if maybe the companies will already give us a hint at what they could do before. But the thing is, if I look at the wages that the unions especially managed to have, we spoke about it already on a prior Flow show. It should have had a positive impact on real wages, but then there's not only the unions, it's all the others as well, where potentially they did not get as much. I really don't know. To me, if companies align on what the major unions have obtained, we should have already seen it in the real wages, but we don't.
Yeah, that's a big problem. But I mean, we've seen 4-5% year on year over the last couple of wage negotiations, but we've still got these negative numbers. I mean, I know it's obviously broad across the whole spectrum. You know, the unions aren't the whole economy; they're not small businesses, medium businesses, and that sort of thing. But yeah, I mean, is real cash earnings going positive? I mean, that would be obviously the icing of the cake. But is it going to stop them if they know they're getting 5-6% wage hikes again next year? Will that stop them from hiking?
No,
the fact that real wage is negative?
No, I think it's okay, providing that there's also decent growth coming. And the problem is in Japan that growth is sometimes good, sometimes relatively weak. And now we are having that new government, new coalition. And we've heard about the Innovation Party guy. He wouldn't be happy with BOJ hikes. And yesterday I read something about, but he's an ex Bank of Japan, of course, they have always a lot to say, and he was there during Kuroda's tenure, right? Wakatabe. So he's a dove. He said he was not expecting any rate hikes before even next spring. So it's I really don't know what is going to take them over the edge now. Higher inflation is one thing, but then we know that if Takaichi and the Innovation Party and they're coming up with new investment measures, it's going to keep inflation high, right? It's going to mean more spending and probably push inflation higher. On the other side is Ueda, um, because we know the two descendants, but is Ueda and the rest of the crew, are they ready to really help the government out and just wait to hike rates longer? I mean, until well, I mean, it's easy actually to change opinion every day, but
Yeah.
until yesterday or the day before, I was really thinking December. I still think about it. December is live for the next hike, but then we had again a negative real wages data point there. I don't know anymore for the Bank of Japan to be honest, mate. What they are going to do? Are they going to wait next year? Which, if they do, is probably going to keep the pressure on the yen. Yeah.
Yeah. I think that'll definitely be decisive on the yen at the December meeting if they don't go. Yeah, I'm still sticking to my window any time from now until
Yeah.
March or something. But yeah, it's like you say, one day you get a great bit of data or a couple of bits, and you think, here we go, and then the next you get something like these earnings, and you think, oh, well, that's going to keep them on the cautious side of things. But yeah, I don't know. Let's just trade with the swings and roundabouts.
Yeah.
Worry about the times we get there. Right, let's move on to the RBNZ. And Hawksby says the labour market has deteriorated as expected, though we expect employment to improve from here. He says it's a multi-speed economy in New Zealand. SNB's Shudin, speaking again, said we expect inflation in the desired range with current interest rates. Now, here's a comment. He says the SNB balance sheet doubling its current size would also work. Now, the SNB do QE, but they don't so much do asset purchasing. They do currency tinkering. So that case suggests that they're going to be a bit more active in the Swiss to counter inflation or weaker inflation.
Inventive. You call it they're inventing or getting more and more inventive. Yeah, I mean it's a bit of a statement where we just had ECB Schnabel saying that they would let their asset purchase program run off. I mean SNB would start one. That's going to it should impact the Swiss franc, right? It should.
Well, it will do, yeah, because they'll be doing it in their currency. That's where their balance sheet mainly is. It's not in asset bonds and everything else like everyone else. So yeah, there's been too much of a reaction in the Swissy, but
No.
yeah, maybe
It
if
went unnoticed because I must admit I didn't see it either. When did they say that, Ryan?
it was an overnight
Yeah,
comment.
yeah. Yesterday afternoon I see it now.
Yeah,
Late
5 o'clock.
afternoon.
Yeah, 5 o'clock our time. So yeah, maybe it just slipped under the radar for most people.
Very much so.
I'm going to tweet it. That might get me 20 pips more in the Swissy.
Yeah.
Anyway, right, moving on. Over to the clown show. Well, one of the clown shows. We've got two big tops operating here in the UK. One is in politics. Rachel Reeves apparently is going to spare the banks from hitting them with taxes over the budget. This has sort of been a bit of an on-off story. Will she, won't she? There's been other reports that Starmer wants her to go for maybe smaller tax hikes, but on more things. So broadening it out to keep the pain to small punches rather than a big mallet round the head. Either way, both going to hurt. She's apparently going to pull out another policy that's been talked about but hasn't yet come to fruition, which is a tax on EV drivers, a pay per mile charge, which is will go down like a lead balloon, obviously. So we're still getting floods of headlines of what may come, what may not come. Some of it's new, some of it's old. As I mentioned at the start of this week, we're probably getting to peak saturation for all this news, and the market probably will get a little bored with it. But let's see what happens after the Bank of England. This stuff's not going away, but there's only so many times markets can read 100 headlines on the subject and keep trading all of it. So we'll see if that wanes later. Some data out this morning. Well, we had Japan's manufacturing and services PMI. I don't know why it's a combined one there. Whatever, they keep doing that. 5150 for that. So that's probably like a composite number. Their services came in a little bit softer, 53.1 from 53.3. Germany had some industrial production, missed expectations, coming in at 1.3%. That was a gain over last month's minus 3.7% year on year, not as bad. Over in Switzerland, their unemployment rate, non-season adjusted, ticked up to 2.9. The other one stayed unchanged. Spain, a bit of industrial production as well. No expectations for that, but it was lower than last month on a year-on-year basis at 1.7. We had some construction PMI data out, which saw Italy moving into expansion, Germany getting markedly worse, as did France. So no improvement in that sector as well. Same thing in the UK, construction PMI coming in lower, 44.1. Eurozone retail sales disappointed in September. It's been quite a flat summer over there for the whole across the broad Eurozone area. That came in at minus 0.1% or 1% on the year. Did I miss the Swedish CPI data? Yes, I did. That all came in green, so a little bit hotter than expected numbers there and hotter than prior. We got Norges Bank out too. They kept rates unchanged, 4% as expected. Say the policy rate will be reduced further in the course of the coming year. The job of tackling inflation has not been fully completed, but we are not in a hurry to reduce the policy rate. Anything else from those guys, Kay, of note?
There she goes right now. Just one thing of note is that Norges Bank is actually among the major second tier major central banks with relatively high rates. If you take away the emerging market or like Mexico and Rand and stuff, but Mexico, by the way, is to 9 as well, right?
Yeah.
Yeah, they do have relatively high interest rates at 4%, and compare it to Sweden and Europe, for instance. Yeah, and they kept it there, and they don't seem in a hurry at all to adjust them. But like all the others, data dependent. If anything would go pear shaped, they're probably ready to act again.
Yeah. So they're going to act in the course of the coming year. So that's an open book.
Yeah, has to be noted though that over the course of 2025, they gradually went from, how should I say, a clear cutting bias, projecting cuts, to gradually going over to a more neutral stance. So that's maybe one that we can note from them, as where Riksbank is now on hold, but they were they still had a much more pronounced dovish bias than the Norges Bank has gradually let go of.
Yeah, very much so. But these guys are usually pretty clear when it comes to.
I love Norges Bank.
And when they're
I
going to
love
change.
Norges Bank. They are very clear. And actually Riksbank, okay, there's sometimes a bit of divergence at the Riksbank board of governors, but Norges Bank is always extremely clear.
Yeah, very much so. We also got a little bit of a early drop. I don't think it's out. It's been published on any calendars yet. I'll have to check. But the Challenger jobs numbers apparently dropped earlier. They came in at 153,000. I've been saying pretty much all week that there was a bit of a risk that one was going to be higher. Not exactly fortune teller call, but we've seen some big numbers from UPS and Amazon and the likes. So we knew probably around 75,000 worth of layoffs were going to be in that number. But still, it came in up a whopping 173%. So that's a big number there. There are also rumours that maybe this was leaked yesterday as well. Hence why we saw a bit of move in treasuries. I don't know about that. But yeah, I haven't checked the website actually, whether it's official, this number, but that's what's dropped. It did come out early last month, if I remember rightly, but only by a few minutes that time. Certainly not a few hours, but that's what it is. We had a hot one from there. ADP came in yesterday, better than expected. We got 42,000 from a 30 to 32k expected. The prior month was revised better by 3,000 to 29k. I think this number, we didn't see much of reaction in the dollar. I think it's the market's in a setting that it could have been worse. The fact it wasn't worse made it okay, even though 42k is a pretty soft number when you're looking at recent call it running averages or whatever over the last few years. So the jobs market is still in soft mode, but it's not falling off a cliff just yet. Within the ADP data, there were some wage numbers, which pretty much stayed unchanged. Those standing jobs are seeing 4.5% wage increases. Those that change jobs are trading up to a 6.7% increase. The PMIs were out as well. Canada had a pretty decent final, jumping from 46.3 to 50.5. The final S&P Global Services for the US, though, came in a little bit softer at 54.8. And then we got the ISM, which was pretty much gangbusters for a lot of the components. The services, main services number coming in at 52.4 was sitting right on that expansion contraction line. So a very decent beat there. Prices paid also jumping to 70. Was expected to come down to 68. Even employment improved to 48.2, so up a big point over last month, but still in contraction. However, the dollar tried to have a little rally, and it pretty much failed to do so, which was a very, very telling sign for a few pairs yesterday. Fed's Mirren was out and about. He went on a real waffle around all over the shop at some point. But the long story short, he said better than expected ADP data was a welcome surprise. He says he sees labour demand being not as strong as they want it. The jobs market data indicates interest rates could be lower than current levels. It says tariff income going away would bear on Fed policy, talking about the court case. It says we want to get to a destination for rates faster than others. It says barring new information, it would be reasonable to cut rates in December. Bank of Canada's Macklem says monetary policy has limited effectiveness in tackling structural changes from US tariffs. Speaking about Carney's budget, he says budget incentives to enhance productivity are pointing in the right direction, but the execution of that will be key. Bank of Canada's not averse to cutting some jobs as well, partly due to Carney wanting to cut the public workforce. They're going to cut 10% of jobs, apparently. Mr. Trump, he's been having a moan up. He says the shutdown was a big factor in all these elections that we had this week, where he didn't do very well. He says the shutdown is impacting the stock market. He says we need to get the government reopened soon because it's impacting SNAP, food benefits, airlines, and again, repeated the stock market. So we know exactly what might push Trump to get a deal done on the shutdown, his approval rating, and the stock market taking a nosedive. Treasury Secretary Bessent says he's very optimistic after the Supreme Court tariff hearing. Not sure what there's to be optimistic about. Kay, any comments on any of that stuff? Maybe the data yesterday?
First of all, the Challenger jobs are official because it's on their website. I just went looking for it while you were talking about it. Yeah, I don't see what Besant really found positive in the initial chatter about the tariffs. That's probably going to be one that the markets are going to keep a very close eye on, because any abandoning or needing to abandon some of the tariffs before Trump finds other numbers in the rule book where he can hide behind to slap them on again. It's going to probably see a few wobbles in the market as well if that would happen. Yeah, for the rest, as you said, ISM not really giving it up yet. Yeah, it's green. But you are right. You're absolutely right in saying. I mean, the reaction was extremely muted. Looks like I'm not going to say the dollar has run its course. I mean, we can't say that, but because anything can really happen, especially that we have still the shutdown as well lingering. But it does seem that we found the extent of to where loans don't want to add to positions and maybe thinking about taking a bit of profit also. Obviously the Challenger thing. I'm always surprised that we see those job cuts appear in one or the other report, like the Challenger right now, but then that we don't see, that we haven't seen it yet on in other reports. Yeah, we didn't. Of course, we have the shutdown, etc., but we haven't seen a massively negative NFP, for instance. ADP is back positive after a slight negative number, but it's a bit strange that those reports on the US job market. I'm kind of starting to think that one day or another we are going to have like one big, massive negative one there coming in, because we've also been talking so much about AI stuff, etc. And I mean, let's face it, that's not a job creator, right? That's rather going to be a job destruction, right? In the end.
Yeah, very much so. Yeah, I mean, people need to understand the Challenger layoffs. For one thing, it's an intention to lay off. So a company could announce, "Oh, we're going to lay off 48,000 people," for example. It doesn't mean all those people will get laid off, and it doesn't give a timeline. It only tells you when that was announced. So UPS announced last week or whatever it was in their earnings in October, they were going to cut 48,000. That goes into the report. Now, if that 48,000 is going to be cut over the next 5 years, that is not going to impact things like NFP straight away. So there's a bit of nuance to it. I mainly use it just to see, are there lots of layoffs being announced? But it's hard to then extrapolate that into some of the harder jobs data.
Yeah, but I mean, it's something that we heard since the start of the year, really, or let's say since spring. And I'm not just thinking about this particular Challenger. When I see Galaxy's comment there, I know that I've been in the markets for 40 years. I know about those things, but it's been happening since really springtime, and that's where I'm finding it a little bit funny that we don't see in any of the official reports really the big drop off. Yeah, we have those revisions. We could always say like, oh yeah, that's part of the revisions, and we had massive revisions again earlier in the year. But it's or is it? Maybe it's just that the official reports are all lazy and not showing anything happening until we get those massive revisions. It's possible, but that gives a very distorted picture in that case, of course. Yeah, I mean, I'm just could be that that Trump is right, that BLS is a complete bullshit bullshit entity, and that they don't show the correct picture. But then in that case, he's kicking in his own doors, because it's not going to be a pretty picture if we think about all those announcements that been done to cut jobs. And in the meantime, we also know that the hiring has stopped, but the firing may not be huge as such in the immediate, but the hiring is also nowhere, and that the Fed has already been talking about. So I mean, somewhere it should show up in a report sooner or later.
Yeah, but you're right. It is one-sided, and it's negatively one-sided, because no one runs a job hire report. No one runs a report where a firm, maybe in the earnings, says they're going to hire 10,000 people. Because yes, we may be in low hiring, but there is still hiring going on. So perhaps someone needs to write a letter to old Challenger to even the balance up a bit and give us a hiring report as well, or maybe give us a
Oh
net
yeah.
number. So, but anyway, yeah, no one really pays attention to Challenger layoffs until something like today happens. But yeah, it's worth noting the nuances behind data like that. Anyway, moving on, and yeah, yesterday's price moves. This is a big reflection of why you're not getting some of the moves. These vols are coming down. Dollar yen now well below 8%. That's been above 8% for absolutely ages. Euro dollar 5.3%. This is getting into quiet territory for some of these pairs. So again, you got to keep a half eye on these vols, because it does give you an indication of how markets might move around data and whatever, and then you can taper your expectations to that. So things like the ISM, if you've got euro dollar vol running at 8%, you're going to get a bigger move. If it's running at 5.3%, you're going to get less of a move. So that's something all traders should have in their armory. Just keep an eye on those vols. It just can help you guide expectations for price moves. Right, I suppose we're going to talk about the second clown show going on today. That's the Bank of England, where we're expecting rates to be kept unchanged at 4%, though there's more than a few banks and institutions thinking there will be a cut today. So as far as broad expectation goes, we're not 100% that they're going to stay on hold. The votes are going to be important again. Market generally looking for a tighter vote at 6.3 from last time 7.2. I've got a feeling the risk that there could be an even tighter one of 5.4 maybe. But again, one of the risks we've got at this meeting is the permutations. This just shows hike, unchanged, cut. But we've got different levels of cuts. We've got 25 cuts and we've got 50 cuts. And that was the mess that the bank got itself into a while back, where we had a split vote and they had to re-vote again. So there's a possibility of that happening again. The market is leaning very dovishly into this one, which is a bit of a risk of a sell rumour by fact as far as the quid goes. So if they do stay unchanged, if it's a 6.3, we could well see a decent rally in the pound. So that's something to keep an eye on. Know what the market is looking at going in. Know what the market sentiment is going in. It's going in pretty bearish. So that's the risk, the price risk for today. We got Michael pointed out in our chat room that there's been a lot of downside hedging activity in the quid, hence why the market's going into it dovish. We have got some decent expiries in the pound today. Let me just pull those up for you. You can have a quick butchers. Where are we going? Dun, dun, dun. Stick it there. So we've got 131. We've got 1.29 billion, which for cable is pretty reasonable, but 129 is the big one. 2.39 billion going off in cable. That's quite a hefty lump there. So, Kay, what are your thoughts on this one? Are we going to see a rally in the quid? And if we do, is it going to get spanked?
I'm going for a 5-3-1 vote. 5 hold, 325.
You sure that's not a football formation?
And Dingra, yeah, and Dingra goes 50. Yeah, I mean, we all, it's if they hold, there's probably going to be a little bit of oh yeah, I mean, we may be a little bit too short sterling, etc. But then I guess that sooner rather than later, the attention is going to start turning back to the um, to the budget, right? The thing is, sterling could just rally a bit further because the market is short, right? The market is short sterling, uh, and I wouldn't only go over the statement, but because we have Bailey as well on afterwards, right? So it could last for over Bailey as well. It's like the waves, yeah. We got a second wave over the statement, and then the first wave statement, and then the second wave over the meeting, the press conference. So yeah, we could have a bit of a recovery in sterling, unless they do what very little people expect and cut. They've been taken over the edge, and uh, that's they're not political, right? At the Bank of England, they won't do a political cut now to help Reeves. That's probably only in Japan that the Bank of Japan could do it. Yeah, I'm taking it into consideration that they might be a little short covering in sterling, but then I'm only small in euro sterling. I wouldn't mind starting to add again if we see 87.5, 60, on the euro sterling. Cable, I'm much less inclined to counter cable too much because of not a reversal, but the dollar may be having run its course a little for now. So cable, I'm less inclined to sell a rally. But yeah, I think that if the sterling rallies on the back of Bank of England, unless they vote 6-3, right, or 7-2 for a hold, in that case it can rally a bit further. But I think that after a bit of wishy-washy, we're going to sell sterling again.
Yeah, I'm 100% in that camp, and I'm like you. I'm probably not going to touch cable. Yeah, I think euro sterling down to this zone, 50s, that sort of area down there. I think that's where we'll probably see some buyers stepping in. I think anything more than that could be an absolute gift, especially if we get down to 87.20. I think I'm going to be scooping a few up down there. But yeah, I'm in the same boat. It may, as you say, it won't be an instant thing. Okay, so you might find that the rest of the day the pound is looking a bit stronger, and it could move a bit more over the day ahead, tomorrow, whatever. But yeah, we're going to get right back into budgetary stuff. So I don't think many people are going to be rushing to buy a rally in the quid. So yeah, dip here. I'm going to have me fishing it out, I think, and you have to play it though, don't you? We have to. If you buy a dip, you got to be knocking some out in the rallies just to cover your carry costs. The same as what we've been doing previously.
Yeah, same as what we've been doing. I mean, don't change the team if you don't have to, right? It's we're still there, and we still. And I'm still thinking the same thing that is unless they really go for a dovish cut today, that we may be running into the budget and then we see a bigger recovery in the sterling. But before that, it's still going to be hammered.
Yeah, absolutely. Right, I'm just going to go back to Mark. He's asking a question about screens. Oh, blimey. It's each to their own, really. I did have 8 screens, and then I cut them down last year to 6 because I just wasn't using 4. When it comes to setups and whatever, you can always have too many, and you can always have not enough. So it's really whatever you feel comfortable with. I always have a screen open with my trading platform on. I have a screen open with my news. I have a screen open with my charts, and I have a screen open to do all the stuff and chat room and whatever. At the moment, I'm only really using 4.5 screens, and I've got sort of 2 spare to do other crap on. But you know, how many eyeballs have you got, Mark? You know, if you're trading off one screen, a laptop or something like that, yeah, it's probably not enough. If you want to keep an eye on things that are going on, so it's all about. There's no right or wrong. It's whatever works for you, whatever you need to look at, and how easy you can look at that stuff. So yeah, I don't know what sort you're running. How many screens you on at the moment, Kay?
26. No, I'm joking. Actually, 7. I've got six on my 6 on my PC, and I got my laptop running next to it. So, yeah, but that's for various reasons as well. But if the question Mark is asking, I guess what do you put on your screens? Because you can only have one screen, but if it's a panoramic, I don't know, 125-inch screen, it's going to be good enough as well. I think that a lot of it is it depends on what your budget is as well. If you're running on low budget, there's one I can think of straight away is investing.com. They give like so much information on prices, news, yeah, whatever, options, etc., etc., etc. That you can open 4 pages only with that one, which is for free. And then obviously you need at least one with charts. And then I don't know, your trading platform, and then a bunch of other tabs on whatever browser you use to have just a bit more information, or a Squawk, or thinking about Pixut, for instance, where you have a lot of news and information coming up as well. That is kind of the basic setup you need to have. I'm always of the opinion that you can't have too much information in a way, because could be that the equities are moving, but then could be that the commodities are moving, or gold, or oil, or something like that, and you see the moves. I'd rather have more information than a huge trading screen, if that makes sense. For instance, well, when I used to be at banks, we have like, and you can have it on most of the platforms. You have like your prices, etc., are windows, right? But I moved away from that, and I just have lines. So I have the one-click trading, but with preset amounts. But I just use lines now to reduce the space that my trading platforms or form on the one thing take up in to really use much more information, and yeah, and then like a full screen with charts, etc.
Yeah. You got to have a good vision of what's going on in markets. You know, I like to go with little small charts of the majors just to keep a broad view of things. You also need your trading platform, and then it's just your information platform and whatever. So really, markets, whatever you feel comfortable looking at. Yeah, you can go out and buy 10 screens. But how is it going to help your trading? That's probably the question you need to ask. Right, let's crack on. Where were we? Right, euro sterling, we've done that one. Euro dollar, yeah, it's again, it's probably just a little pendulum swing. Yeah, as Kay says, it may not be the end of the dollar rally. It's going to take a lot more to turn this trend around. So this is probably just we've gone far enough. It was very telling in this one yesterday. We got that good data from the US. There was every reason why the dollar could have carried on going, being bought up, but it didn't. And it was not a shock to me to wake up this morning and find us back above 115. I got stopped out the rest of my little short at 115.10. I'm sitting on my hands now, but this 115 level is going to be important. And I want to see another test. If we get another test that holds, then we've probably got a bit more of a bottom coming into play, and then we're probably going to be pushing back up again. How far we go from there is anyone's guess. We've got this break point at 115.40s, which I think is going to be important because it already resisted straight after that break. So that's going to be next level to watch. While we're above 115, we're probably going to see a bit of resistance coming in from 30s and probably up to 50, 60, something like that. But if we're getting above there, then we might start building on that. But as you can see, even this short-term move off this high, the 38.2 isn't until 116.40. So a long way to go just to turn around this sort of trend. So not out the woods yet, but once again, this 115 level is proving to be pretty significant in terms of where we go next. Dollar CAD, I'm not looking to buy a dip right here, Ali. I may consider quite a way lower. We have got some levels in play. I wouldn't call them levels I particularly trade. I'd like to wait for the juicy ones, maybe down to 140.30s or 140, maybe even back down to my old 139.78 level. At the moment, yes, we're looking a bit weaker. This, though, is just in, minor dip territory at the moment. It's not good that we're back under 141. Look for a bit of resistance again, 141.710, 141.20 on rallies. This is the level. It's a bit of an old level, around 89.90. Again, we've got another break point on the way up down here, 75, 80, 79, whatever you want to call it. That's potentially going to be significant. If we're getting under there, we might see a few more short-term longs thrown in the towel, and you get a bit of a steeper pullback. But I personally wouldn't be interested until we get to the low 140s, as I say, maybe this 140.30 area down here. What else? Dollar MEX. This one's piquing my interest. We've had a little blowout. We got up to that old 50 fib of that's the big 2024-2025 rally. Banged ahead on that up there. We're now back down again. We are, as you can see, I've just put these lines on more for visuals than anything else. We are in a bit of an uptrend. It's very slow. It's quite shallow, but it is respecting a bit of an uptrend now. I'm going to be buying into this 1850 level. If it holds, I think if this holds, then it could potentially mark a really significant bottom. And then finally, we might start seeing the trend turning around a bit, and we start eating into what we've seen all year. So holding this 1850 could be very, very significant. You got any thoughts on this one, mate? Hello?
Yeah. Oh, I think
Did you nod off?
Hello. Do you hear me?
Yeah.
Oh, okay. Thoughts on the makes? Well, we will see tonight. Yeah, they're expected to cut again, right? Let me quickly. Yeah, they're expected to cut again. It's going to become important what they say now, because they have kept their cutting bias until, well, this evening. We will know what they say. We've had a bit of a mixed picture on the latest inflation. It has been coming down, but the downslope has flattened somewhat. So there is a potential that they go neutral after today's 25 BPs cut, and then it will be case to see what rather risky is doing. It is a fact that interest rate differentials have diminished since they started to cut. So there's less incentive to really be long makes for the real carry trade. Maybe less incentive, but uh, I'm 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 still not out of it. Especially it could react a bit swifter if we get a bit of a bottoming out, let's say, for the dollar for a while. It could for sure go and retest this 1850, and I'm even thinking there's stuff going on in the 40s as well, right? And I
Yeah.
think, yeah, around there, I wouldn't rule it out to at least go for a test and then see what happens. But I agree with you. Sorry, that if that zone holds, yeah, that's where I'm looking at the top end of that. Yeah, over there, like right, 1840s, right? That's where I think it's going to become important, and then we will see what happens because still not out of the woods with that USMCA. We still
Yeah. Yeah.
don't know what's going to happen there, and which could cause a bit of a trauma. But then I would assume that there is room and time to react if something stupid happens on the USMCA, right? For the time being, Scheinbaum and Ebrard are doing their utmost to stay on the right side of Trump. Yeah, so I would say we're going for a retest, and then we will see what happens.
Yeah, very much so. And I just want to highlight again, okay, the importance of levels on charts, big levels on charts. We were talking about this 1850 when we were coming down into the 19s, how important it's going to be. It's been important since July. Okay, we're now in November and it's still important. You can take off everything else on your chart and you could have just traded that one single level, okay, for the last 4 or 5 months or whatever, and you could have had some decent trades against it. So that is the importance of your chart and highlighting these huge levels, because they do, when they do something, they can do something for months and months and months, and you don't really need anything else. Of course, when it's intraday, you want to look at everything else. But as I say, we highlighted this level way back in May, and look how long it's been in action for. Right, I'm going to pass it over to you, Kay.
All right. Dimi, Kiwi. Yeah, I'm usually. I didn't put it on this thing before you spoke about the 23.6. Yeah, okay. It's a 1 week move. Yes, 23.6 coming in at 56.70. Yep, that's already capped. Yes. But the overall picture, I've been non-stop talking about it, that the Kiwi is still weaker than the Aussie, that is not looking good, and it's still not looking good to me for as long as we are below this 56.85 figure. It's still not a good picture right now, bearing in mind the dollar having stopped rallying for now. It may be that we hang around here for a while, but if you pick one out, or if you think that the dollar is going to rally again, it's obviously one of those that is still the best currency to be one of the best currencies to be short of against the dollar, if you think that the dollar is continuing to rise. Okay, for me personally, I'm looking at the dollar right now a little bit differently, but it's for sure, if you talk about the Kiwi, one of the weakest ones out there still. Okay. Somebody asked me to look at, are you looking at Pop Karim dollar Swiss? Well, as I said, I think a couple of days ago, we are entering a zone here above 81 up to 81 and a half, bit of a traffic zone, right? So we went above 81 and now we are back below. Again, this is for as long as this Euro Swiss remains slow. I would say it's still going to be a euro dollar proxy, right? But the thing is, seems like those Swiss officials are somewhere in the zone where they wouldn't want the Swiss to strengthen much from here. Because I just went back through those comments that Judin came out with last night, and she said that that Swiss franc has strengthened in real terms last year as well, and or this year, and she doesn't seem to be overly happy with it, and that's why she probably was talking about increasing the balance sheet as well. So with the I'm rather on the other side of the Swiss franc, but the dollar Swiss has a bit topped. Okay, if it goes above 81.50, 81.70 here, the medium term picture may change. Okay, and then we rally. But for as long as that doesn't happen, in you look at the dollar, how the dollar behaves really. I don't know what you want to be doing really with it, or if you want to wait for a retracement and buy it in the low 80s or so. That's also a possibility, of course, but that we start to do something like this because yeah, the dollar stopped rallying, but maybe just maybe it's just going to range a little bit. And look at this euro Swiss. It's trying. We really need to get above this 1530 zone. I would say yes, we're hanging around the trend line, but as I'm pleased to say, this just a line on a picture, right? It's rather the zone here, 93.18 up to 27 or so in the euro Swiss, call it 1530. If that goes, then I think the Swiss continues to weaken. Gold, that thing is holding, and then I have straight away a couple of thoughts there. And oh, I'm looking at the clock. It's already that time of the day. So I'm going to be very quick. It's been holding all the time, but then that rally here, and thinking about what Michael Brown was putting on the on our chat this morning, saying that it maybe some people had the Challenger layoff number already. So I'm wondering to what extent those $40 is not some people, having already wind of the number. But we have to say that it's been finding buyers on dips. Okay, and now we're back above 4K. We could be pushing a bit further, in my opinion. Really short term, 39.75. That's where really it has to hold. If we get back down there, 75.80, and then we see it rally, that would be like a normal continuation. But it may be that we don't see below 4K over the day. I'm talking about short term here. At still wider range, 38.5, 39, 41, 10, 30. But inside, it could be that we are looking to push up a little further. And you've spoken about sterling and everything, right? Or did we look at the cable, Ryan?
Just only briefly, just a quick look.
Yeah, I think the magic number here is still going to be 131.40. Once the BOE is digested, look where we are. If we see some sterling rally because they didn't cut and they haven't given the market much, a bit of a further rally should really not be excluded. And then look at where we end up. 130.140 above or below could be enough to make or force a decision on the cable going forward into the end of this week. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Yep, a busy show. I hope you're all enjoying these shows that we do for you. If not, send your complaint letters to K-Man. And otherwise, we shall see you later on
what
Face.
Was that?
I said if people have got complaints, they can send them to you. So yeah, take care over the Bank of England. Those of you in the chat room will have all that covered and see what mess these clowns come up with. Have a great day, everybody. We'll catch you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.